Hello, Travis with Telestide Bookkeeping and Tax, talking today about how to properly book escrow payments and specifically with real estate investing and a more advanced technique known as a wrap. So you're purchasing a property subject to existing financing. You're leaving an existing loan in place and assuming it, or the seller is holding a note, and you're selling that same property and holding the loan on that. So let's take a look. Various ways you can do this, but let's just start. This is a sample account, and I'm going to do the first one in the bank feed. So let's say that this $1,200 payment is the mortgage payment for the existing loan, if you're assuming, or the note that the seller is carrying. And so this is going to be the loan payable. And let's just split this three ways. Let's say this is the property, we're tracking by class. You're going to be paying interest, and these numbers would come from your mortgage statement or your amortization schedule. And let's say that's your interest, and then also your escrow. And we're going to have two escrows in this case. And of course, we'd be tracking it by class. And this meant this 400 as well. So the reason I put asset there is this is money that the servicing company is holding on your behalf that they're going to use to pay taxes and insurance. So it's actually an asset on your books. Okay. And you can see down here, our difference is 0. Great. Let's go ahead and add it. Just a moment. Okay, we're back. Okay, so let's see what that did on our balance sheet. We see our escrow asset, $400. That's correct. And what else do we have on there? I think everything else is on the P&L. So let's refresh this. Interest paid, $400. Oh, the loan payable, that's right. So that should be reduced by 400. So that's correct. Great. Okay. Now let's look at what happens when we collect payment. I'm going to use bank deposit this time. And so this is from our buyer. So this is a loan held, loan to buyer. And let's say they're also making a $1,200 payment. I know in an actual situation that's going to be different, and you're going to be making a profit on the spread and interest. Or at least you could. So we have the $400 to the loan held, and then this is going to be interest earned this time. And then we also have escrow because we're collecting from our buyer for taxes and insurance, but this is the liability because we're holding it. It's not actually ours. We're just a pass-through in this case. And we'll use Main Street tracking property by class. Okay. All right, let's see what that did on our balance sheet. This is a good way to check and make sure everything's flowing through correctly. Okay, so we have our loan to buyer. Now, there was no balance there, but yes, it would decrease the asset. They're paying down the principal, so that's correct. And what else did we have? Our escrow liability went up. That's correct. And let's look on the P&L. We should see the interest earned. And we see interest earned. Great. Okay, now let's look at what happens when we pay taxes or insurance or both. So again, you see this on your statement from your servicing company. So let's say that they show that they paid insurance and it was $400. And they were using that. Okay, so insurance expense, debit the expense, that's correct. And now our asset is going to be credited, decreased because they paid it. So it's not an asset anymore, or at least it's reduced. And then we have our other escrow account, our liability. This holds a credit balance, so we're debiting it. And then the tricky part here, I'm thankful to Nick Baldo with Income Digs to point this out. Really, this is a reimbursement. So we received the $400 from our buyer, essentially, through that escrow account. And so these are going to wash. And the reason we do still leave them there, even though it's a wash, is because it gives us a trail of what accurately happened. So let's save and close and see how that affects. First of all, the balance sheet. Okay. Our escrow asset is down to 0. That's great. That's correct. And our escrow liability is washed out. Perfect. Let's refresh this. And insurance, it's a wash as well, which is exactly what we'd expect. The 0 there shows that there are transactions there, but the balance is 0, or the net is 0. So in and out. So I hope that's helpful on how to properly book escrow payments. In there, you can see how to book the escrow payments that you pay, how to book the escrow payments that you receive, and then how to book the payments when the escrow company pays taxes and/or insurance on your behalf. Any questions, comments, concerns, conundrums, put it in the comments and I'm happy to answer. Thanks.